For 28 days, there were aggregate fails to deliver at a registered clearing agency of 10,000 shares or more. Today, with a huge vote coming tomorrow, AMC's volume was half the daily average, and after 28 days, AMC was taken off the threshold securities list. Now, one might notice the volume and large inflows. Maybe they really did use APE as a swap to clear AMC fails to deliver. For example, using a likewise stock and then it converting, they have no shares that they actually have to cover on. Now, this is from a wrinkled brain on Reddit. He goes, the market maker could be using the method above, which method is hedge fund then sells that put back to the market maker, except the market maker doesn't buy back the phantom shares, leaving the net short on the stock and having pocketed the cash from the phantom shares that they did not need a borrow for. So the wrinkled brain is basically saying the market maker could be using this method, selling puts then buying them back for the same price, as an excuse to create new phantom shares and then selling them to the short hedge funds, the one trying to hide a fuck ton of FTDs. This makes the short hedge funds look like they bought shares to clear their FTDs, and then the hedge funds sell the share right back to the market makers for the same price to create a neutral net zero trade while resetting the FTD countdown, essentially kicking the can down the road a little further and hiding 109 million shares of their short position from being reported as FTDs. Now the question still lies, why would they wait to do this? What is going on, guys? Socks here. Welcome back to the channel. Welcome to the channel if you're new. Today we have a lot of stuff to talk about, especially the meeting and what happened. I listened to the entire meeting and we're going to break it down chart wise, break it down proposal wise, and then we also have some more DD and what we expect going forward with AMC. So I'm going to update you on everything that there is to update you on, so you don't have to watch another update video here on YouTube. All I ask in return, please hit the like, please hit the subscribe button. It's free, it helps me out. Let's get into it. So the proposals all passed. Proposal 1 to dilute passed. Proposal 2 conversion split passed. Proposal 3 passed. All of them passed, and AMC was halted twice, first to the downside, then to the upside. We ended up making some profits today in the Discord on AMC and the S&P 500 as well as APE. Now you saw this in AMC's chart and it's still currently falling down 13.28%, trading at $4.74, halted once again as we're making this video. AMC is pushing to the downside, breaking below this channel of making higher highs and higher lows, so this is already invalidated. In my opinion, AMC is still trading in this cycle, except shorts are taking advantage of this dip. I'd watch for a hold right around 450 and then the relative lows right around $3.70 for a bottom on AMC. However, again, they are going to try and close that arbitrage gap for the conversion. For example, if you bought APE here at $1, they're not going to want it to convert to AMC at $4 because then you have that huge arbitrage gap of you profiting money. So what they're trying to do is close this gap. As for APE was a solid dip buy opportunity, up about 15% right now as I'm making this video, sitting right around that $2 level. And in my opinion, it just filled this gap right up around $2.10, but it does have another gap to fill all the way up to $2.68. I think after hours, APE is going to run and hit somewhere around $2.68 at minimum, and overall could come up to about high threes, and AMC is probably going to meet it at the relative low on the stock, right around that $3.50 to $4 level. I think AMC and APE are really going to try and meet themselves. Now again, it's not going to convert right away because of that lawsuit filing. However, AMC has a lawsuit filing to basically try and get that lawsuit dismissed. They have a filing basically trying to get it dismissed so that APE can convert at a random day whenever that does end up getting dismissed. But APE is pumping. It was halted to the upside as well, up 17.63%. It's looking solid. You guys let me know if you've traded this. Basically, I didn't see this coming, how much Adam Aaron basically said this much was in favor and this much was against. It was a huge spread on some of the proposals that a huge majority voted yes and not a lot voted no, which I didn't necessarily believe because I saw throughout the community that a lot of people wanted to vote no. Touching on some Ortex numbers, 23.6% short interest utilization is still maxed out. The cost to borrow at $247 for an average and $264 a max. As for APE, 6.8% short interest utilization at 84% and the cost to borrow sitting at 12.5%. In my opinion, APE shorts are going to get out over the next week or so, if not over the next couple of days. So I think APE will continue to have a little bit of a rally. Now, keep in mind, this expiration is absurdly high. For the calls to put ratio, there's so many puts expiring in the money and out of the money, and this is going to help them push AMC further to the downside, so keep that in mind, guys. This is not over yet. But since this passed, before the conversion and reverse split happens, you're going to see shorts take advantage of this. However, afterwards, you may or may not see a huge pump on AMC. That's something that we're going to pay attention to going forward. Now, with the overall economy, the US February CPI inflation came out today at 6.0% year over year, and that was exactly what it was estimated at, so it came right on target, the slowest annual increase since September of 2021. This was solid for the market. This is why you saw it run about 2% today. If you're looking at ticker symbol SPY, came up to about 393, right around that resistance level, got rejected, and it's kind of hanging around green on the day. The SPY is looking good, but I do expect it to get rejected at least right around 398, and I still think it will fall even further. Just because CPI came out decent, it does not change the sentiment going forward, what's happening with the banks and what they ultimately have to do, what the Fed has to do going forward. Now that you made it this far through the video, guys, please pop in the Discord down below. You get my trades as soon as I'm making them. I called out a few trades, people followed them today, we made some decent money, so make sure to pop in the Discord. Do not sleep on that. That link will be under the video. Plus, if you want 17 free stocks, download Moomoo, open an account, and once you make a deposit, you are going to start earning free stocks from there. That link will be under the video as well. Very, very, very beneficial, plus a very easy platform to use. Now, the Federal Reserve launches investigation into the collapse of Silicon Valley Bank, and Silicon Valley Bank was just sued by shareholders for fraud. You guys let me know if you are included in this lawsuit. Plus, the DTC suspends all services to Silicon Valley Bank. QSIP is now globally locked. And finally, bank giants JP Morgan Chase and Citigroup are trying to handle largest movement of deposits in over a decade. Guys, the bank run is starting, and the Federal Reserve's little 25 billion contagion block is probably not going to hold up any further. Plus, the US is at the debt ceiling. Now, during the 1930s, many banks failed in the United States. In total, it is estimated that over 9,000 banks failed during this period, while most of these failures occurring in the early years of the Great Depression between 1930 and 1933. In 2008, we saw all banks receive a bailout from the taxpayer. Today, the United States' 16th largest bank has collapsed, and other regional banks are watching valuations plummet, while the Federal Reserve's rate hikes have been motivated by a desire to address inflationary pressures. This has helped cause the big banks in the United States to be sitting on $620 billion in unrealized losses. Why? Banks purchased lots of treasuries and bonds when rates were at zero, and coincidentally, central banks around the world are now facing significant losses, which will fall on the taxpayer. Both Goldman and Barclays say rate hikes are off the table for March. Now, when the entire economy is built on cheap money, the blocks are fragile, and while every rate hike, you are pulling at them. Eventually, things begin to shake. This is all happening as more countries seek to trade in local currencies. What is going to happen next? Well, Moody's cuts outlook on U.S. banking system to negative, citing rapidly deteriorating operating environment. That is right, the big three rating firm called a rapidly deteriorating operating environment despite regulators' efforts to shore up the industry. Close out the video, more layoffs come. Ticker symbol META, aka Facebook, aka Meta, to lay off 10,000 employees and close an additional 5,000 open roles in its second major round of job cuts in the past 6 months. Overall, guys, this is what I got for you for today's video. Hopefully you enjoyed watching or found value out of the video. If you want to talk with me on the daily and talk with me about the proposals and what's happening with AMC, make sure to pop in the Discord, linked in the description down below. Essentially, watch those levels on AMC, watch the relative low right around $4 to $3.70, and watch that arbitrage gap get closed. Plus, GameStop is at a very beautiful spot. I added more calls to GameStop. I love you all. Lottery Stocks out.